Welcome back to the Pro Ticker Podcast, your Tuesday morning edition, covering major financial magazine headlines, everyone.
It is good to be back. And, looking at the stack of reports we have for today, Tuesday, January 27, 2026, it feels heavy. I think this might go down as one of those days future historians actually write about.
It really feels that way. I mean, usually we're looking for a signal in the noise, but today, the dashboard of the global economy is just.
Yeah.
It's lighting up all at once. We're looking at a theme today of records and realignment.
That is the perfect way to frame it.
Just to give you a taste of what we're unpacking.
Yeah.
Gold has shattered the $5,000 ceiling. That's 5000.
Incredible.
AI chip makers are practically printing money, and we have trade wars that are literally reshaping the map of who does business with whom.
It's a morning of historic numbers, absolutely. But what we need to do on this deep dive is connect the dots. We have to look at how the booming AI infrastructure, companies like ASML and Micron, is colliding with these massive geopolitical fractures.
Exactly. We're talking about Trump's tariffs versus this massive new EU-India deal. And we're going to figure out why all of this chaos is driving investors to flee the U.S. dollar and run to the arms of precious metals.
It's a classic flight to safety, but the drivers feel new this time. It's not just fear, it's a structural shift.
And just so everyone knows where we're getting this intel, we are pulling from breaking reports this morning from Reuters, Bloomberg, CNBC, and Yahoo Finance. We've read them so you don't have to. So let's get into the engine room first, the AI boom.
Yeah, because despite all the noise about the economy, the physical build-out of artificial intelligence is not slowing down. If anything, it's accelerating.
And the star of the show today, according to a report from Reuters, is a company I feel like everyone knows, but nobody truly understands, ASML.
The Dutch giant.
So Reuters is calling them the only game in town. Apparently, they're riding NVIDIA's coattails, but they're doing it with technology that it sounds like science fiction. Their stock has doubled since April 2025.
Well, to understand why ASML is so critical and why their stock is doing a moonshot, you have to understand what they actually do. They hold a monopoly on something called extreme ultraviolet lithography, or EUV.
Okay, let's unpack that, because I read the details on how this works, and I honestly had to reread it 3 times to make sure I wasn't looking at a screenplay for a sci-fi movie. We aren't just talking about printing circuits.
No, it's much more violent than that.
Listen to this. To create the light beams they need to print these chips, they take droplets of molten tin and vaporize them with lasers.
Correct.
And they do this 50,000 times a second.
It's just mind-boggling engineering.
And the result is light beam that is 13.5 nanometers thick. The Reuters article gave a comparison that I love. A human hair is about 80 to 100,000 nanometers.
So we are working at a scale that is, effectively invisible to the human eye. And that is why ASML is the only game in town. If you want the high-end microprocessors that power AI, the ones training the models we use every day, you need these machines. You can't get them anywhere else.
That's the definition of a moat.
It's more than a moat. It's an ocean.
And that explains the stock price. I mean, if you're the toll booth for the AI revolution, business is good. But here's where it gets really interesting for investors. The experts quoted in the article say that even if a competitor popped up tomorrow with some magic machine, the industry is locked in.
That's the lock-in effect. Dan Hutchison from Tech Insights, he made a great analogy in the source material. He said changing vendors now would be like swapping a Formula One engine in the middle of a race.
You just don't do it.
You can't. You have supply chains betting the farm on this specific technology for the next, 5 to 7 years? If you switch, you crash. So ASML is effectively immune to competition for the near future because the cost of switching is just too high.
So on one hand, we have this Dutch company dominating the printing of chips. But you need somewhere to store all that data, right?
Right.
Which brings us to Micron.
Micron Technology, another piece of the puzzle.
Yeah, Yahoo Finance and Reuters are both reporting that Micron is dropping $24 billion on a new facility in Singapore.
That is a massive capital injection, and it really speaks to the scarcity we are seeing.
Right. The reports are saying there is a severe scarcity of memory chips. I remember a few years ago we were talking about a chip glut, too much inventory, prices crashing. What changed?
AI changed the math, totally rewrote it. These AI models require huge amounts of high bandwidth memory, or HBM, The demand is so high that analysts are predicting these shortages are going to last through late 2027.
2027. That is an eternity in tech years, isn't it?
Yes. So when you see Micron investing billions in Singapore, it's not a speculative bet. They aren't building a factory hoping customers show up. They know everything they can possibly make is already sold.
So take a step back. We have ASML blasting tin with lasers, Micron building massive factories in Singapore. The message from the tech sector is loud and clear, full speed ahead.
Precisely. Capital is flowing heavily into hardware. The digital world is expanding. But, and this is the big but, while the tech sector is building this unified future, the geopolitical landscape is fracturing.
That is the perfect segue. Let's look at the split screen. While Micron is building in Singapore, back in the West, things are getting, tense. We have headlines from CNBC and Yahoo Finance about tariffs and trade wars.
This is the realignment part of our episode title, and it's getting messy.
President Trump has announced he is hiking tariffs on South Korea. Now, let's pause there. South Korea isn't some adversary. They're Asia's fourth largest economy and a major ally.
A critical military and economic partner.
Yeah, exactly. But the reports say he's taking tariffs from 15% up to 25% on autos, pharmaceuticals, and lumber.
And the market reaction was immediate. We saw South Korean auto stocks, like Hyundai, just take a sharp fall.
But this is what confused me. The reports say Trump claims the South Korean legislature is delaying the approval of a trade deal reached last summer. So he's using tariffs as a negotiation tactic.
It's a tool of coercion, essentially. It's using economic access to the U.S. market to force legislative action in a sovereign nation. It's a very aggressive form of protectionism. And it sends a signal that, even friends aren't safe from economic pressure.
Okay, so the U.S. is putting up walls. But if you look at the other side of the world, walls are coming down. We have this landmark deal between the EU and India.
This is a huge development that I think might be flying under the radar for some people in the U.S., but it absolutely shouldn't be.
CNBC quoted Ursula von der Leyen calling it the mother of all deals.
She did. And the scale backs that up. This deal creates a free trade zone of 2 billion people.
2 billion. That is a quarter of the planet.
It represents 25% of global GDP.
That is massive.
It is. And if we connect this to the bigger picture, you have to see this as a strategic rebuff to the United States.
How so? I mean, is it explicitly anti-American?
It's not explicitly anti-American in the wording, but in strategy. Yes. Look at the motivations. The EU is explicitly trying to shed its reliance on the US and China. They want diversification. And India is facing a 50% tariff from the Trump administration.
50%.
Yes. So India needs to offset that hit. They need new markets. So what you have are the middle powers, Europe and India, banding together to hedge against U.S. policy.
It's almost like the world is saying, okay, if the U.S. is going to be difficult, we'll just trade with each other.
That is exactly what is happening. We even saw Canada mentioned in the Bloomberg reports refusing to derail its own trade diversification despite U.S. threats over a China deal. The world is hedging its bets. They are building redundant systems that bypass Washington.
Which brings us to the financial fallout of all this hedging. Because when people get nervous about the U.S. dollar and U.S. policy, they run to the classics.
Segment 3, the flight to safety.
Gold, $5,000.
It is a psychological barrier that has been completely shattered.
Bloomberg reports that gold has crossed $5,000 per ounce for the first time ever. It has doubled in 2 years. And silver is acting like a tech stock. Up 9% in a single session.
Up 57% year to date. It is incredible volatility, but upward volatility.
So what is driving this? Is it just people panicking because of the tariffs? Or is it inflation?
It's deeper than panic or standard inflation. The sources, specifically Vincent Mortier from Amundi, and keep in mind, Amundi manages 2.3 trillion euros, so this isn't small money. He calls it the debasement trade.
Debasement trade. That sounds ominous. What does that actually mean for the listener?
It means that big institutional investors, we're talking central banks, sovereign wealth funds, are retreating from fiat currencies, specifically the dollar, and sovereign bonds like U.S. treasuries.
Why?
Because they fear instability, they fear debt, they see the U.S. isolating itself, running massive deficits, and using the dollar as a weapon with sanctions. So they're saying, we don't want to hold your debt anymore. We want something tangible. We want an asset that no government can print more of.
And the data supports this.
Absolutely. The Bloomberg Dollar Spot Index is dropping. But here is the stat that really stood out to me from the Bloomberg report. Traders are paying record premiums for options that profit if the dollar falls.
So they are betting big money that the dollar is going down.
Bearish sentiment on the dollar is at its highest level since 2011.
Wow, that feels significant.
The market views the current U.S. political landscape as unpredictably dollar negative. That is a direct quote from the reports.
It feels like a structural shift, not just a blip.
I would agree. When you have central banks buying gold to diversify away from the dollar, that is not a short-term trade. That is a long-term strategy. It's a vote of no confidence in the current financial architecture.
Okay, so we have chips booming, trade wars raging, and the dollar tanking. But I want to bring this down to the ground level. To you sitting at home looking at your bills, because there is a segment in our source stack about energy that I think ties all of this together.
It does. It connects the weather, the AI boom, and your bank account.
Bloomberg and Yahoo Finance are reporting on a massive spike in U.S. natural gas prices. They surged nearly 30% recently.
Hitting a 3.25-year high.
Now, part of this is weather, right? We have Winter Storm Fern.
Yes, Arctic blasts are freezing production. The storm locked out about 12% of U.S. gas production.
That is a huge chunk of supply to lose just when everyone is turning up the heat.
Exactly. And the grid is feeling it. PJM Interconnection, which is the largest grid operator in the U.S., declared a Level 1 emergency. They are struggling to keep the lights on.
But here is where it gets really interesting and concerning. It's not just the cold weather straining the grid. It's the stuff we talked about in segment 1.
The data centers.
Right, those tin blasting lasers at ASML, those massive Micron factories, the server farms running the AI, they are hungry.
They are voracious.
We have a stat here. Data centers used 4.4% of U.S. electricity in 2023. But they are expected to hit 12% by 2028.
That is a tripling of demand from a single sector in 5 years. That is unprecedented in modern grid history.
So we have Micron building chips, ASML building the machines to print them, and then these chips go into data centers that suck up massive amounts of power.
And that power has to come from somewhere. And right now, it is competing with residential heating and cooling.
And the consumer's paying for it.
The numbers are stark. Utility debt is up 31%. Electricity costs rose 6.7% last year. That is double the rate of general inflation.
That's the so what for the listener. The AI boom isn't just happening on Wall Street. It's happening on your utility bill.
It is a collision of supply and demand. You have aging infrastructure, extreme weather events like Storm Fern, and this insatiable new hunger for power from AI. It is the perfect storm for higher prices.
It really puts a different spin on the tech revolution, doesn't it? It's not just code in the cloud. It's physical infrastructure that uses real resources.
Knowledge has a calorie count, essentially.
I like that. Knowledge has a calorie count. So let's recap this Split Screen Tuesday. On one side, we have the future being built with lasers and billions of dollars in investment, ASML, Micron, the whole AI engine room.
And on the other side, the geopolitical framework that supported the global economy for decades is cracking. You have U.S. tariffs on allies like South Korea. You have the EU and India forging their own massive path.
And sitting in the middle of it all is the investor, looking at a falling dollar and saying, get me into gold.
And the consumer looking at their heating bill and wondering why it's skyrocketing.
It is a lot to digest. But if we zoom out, what does this all mean?
You know, it raises a provocative question. We often talk about the end of American economic dominance as some sudden event, a crash, a war. But look at today's headlines.
Go on.
If the mother of all deals between the EU and India succeeds, creating a massive trade zone that excludes the U.S., and if the debasement trade against the dollar continues, with central banks hoarding gold, are we witnessing a shift in global power that isn't happening with a bang, but with a trade agreement and a gold rally?
That is a heavy thought to leave us with. Are we watching the torch pass while we're busy looking at our phone screens?
We might be.
Well, on that cheerful note, we are going to wrap up today's deep dive. It is certainly a day for the history books.
Indeed.
We'll see you all tomorrow morning with new headlines from major financial magazines.